Welcome to our in-depth analysis of last week's unexpected stock market turn, the significant drops in NVIDIA and Super Micro. In the ever-evolving world of tech and artificial intelligence, these two giants experienced a notable decline that has sent ripples throughout the market. But what does this mean for the industry, for investors, and for the future of these companies? There is a lot to unpack here, and we're going to do just that. Stay tuned as we delve into the specifics of this surprising market event. Let's dive straight into NVIDIA's stock crash last Friday. The tech giant saw a substantial 10% decrease in stock value, wiping nearly $212 billion off the company's market capitalization. This sharp drop represents a 20% plummet from their peak value of $950 per share, down to a sobering $762. However, it's important to remember that despite this dramatic fall, NVIDIA's stock has still seen a 50% increase throughout 2024. What could have caused such a dramatic drop? One potential factor is the company's heavy reliance on the artificial intelligence market. This dependency exposes NVIDIA to significant risk in times of market volatility. Another contributing factor could be the psychological impact of Super Micro's concurrent stock crash. Investors often react to market trends, and a significant drop in a related company can trigger a ripple effect. This is a classic case of market sentiment playing a role in stock performance. In the world of investing, the herd mentality can often drive market trends. When investors see a company like Super Micro experiencing a decline, it can spark fear, leading to a sell-off in related stocks, such as NVIDIA. This is not to say that NVIDIA's fundamentals are weak. In fact, the company has been performing well, with strong financials and a dominant position in the AI market. However, in the short term, market sentiment can overshadow these factors, leading to sudden price movements. Clearly, this was a significant event for NVIDIA, but what about Super Micro? Super Micro also took a severe hit on the same Friday. The AI hardware manufacturer's stock plummeted by 23%, marking its steepest drop since August of 2023, and closing at its lowest point in over 2 months. This dramatic fall, however, doesn't tell the whole story of Super Micro's performance. Despite dropping roughly 40% from its peak in March, the company has still managed to maintain an impressive overall growth of over 151% this year. When we compare this to NVIDIA's situation, it's clear that Super Micro's fall from grace has been more dramatic. Yet it's also evident that Super Micro has demonstrated a greater resilience, bouncing back from its lows with greater vigor. So what might have caused this severe drop? One potential factor could be the company's heavy reliance on the AI market, similar to NVIDIA. The AI industry is still relatively nascent, and its volatility can have significant impacts on the stocks of companies like Super Micro. Further, Super Micro's fall might be partially attributed to the ripple effects of NVIDIA's drop. As investors grow wary of the tech sector, companies heavily invested in AI, like Super Micro, can face significant backlash. But is there a silver lining here for investors? Despite the recent downturn, Super Micro's strong performance over the year suggests a potential for recovery. Investors might see this as a buying opportunity, a chance to acquire stocks at a lower price before the company bounces back. Yet, as always, such strategies come with their own risks, and careful consideration is key. Moreover, Super Micro's position in the AI market is noteworthy. As AI continues to expand, companies providing the necessary hardware, like Super Micro, are poised to benefit immensely. Though both companies have faced a tough week, their impact on the market must be noted. The stark drops in their stock prices serve as a stark reminder of the volatility inherent in the tech sector, particularly within the realm of artificial intelligence. The stock crashes of NVIDIA and Super Micro had significant ripple effects on the market. The shockwaves were felt far and wide, with the Nasdaq 100 index dropping by 2.1%. This marked the fourth consecutive week of decline, with geopolitical risks adding fuel to the fire. Investors and market spectators alike were left reeling from the sudden downturn. But what does this mean for the tech and artificial intelligence markets? Well, the landscape of these industries is as volatile as ever. These industries are driven by innovation, and with that comes a degree of uncertainty. Yet it's this very uncertainty that often opens up new opportunities. The stock crashes of NVIDIA and Super Micro, while initially alarming, may present such opportunities. In the wake of these crashes, other tech and AI companies may find room to grow and innovate. Those that can adapt to the shifting market conditions and the evolving demands of the tech and AI sectors stand to gain the most. Meanwhile, investors can seize this moment to explore new avenues, diversify their portfolios, and potentially scoop up some bargains. While the market has been shaken, it's essential to look at the bigger picture. Market crashes and fluctuations are part and parcel of investing. It's how we respond to these incidents that will shape the future of the tech and AI markets. Having analyzed these events, we can draw some key conclusions. The recent crashes of NVIDIA and Super Micro have not only impacted their market capitalization, but also sent ripples across the broader tech and artificial intelligence market. NVIDIA's over-reliance on AI and the severe psychological impact of Supermicro's crash have played significant roles in these downturns. However, it's crucial to remember that despite the declines, both companies have shown remarkable growth this year. NVIDIA is still up by over 50%, while Supermicro has surged by more than 150%. Therefore, these crashes may not signify a long-term downward trend. Looking forward, it's likely that NVIDIA and Supermicro will continue to be key players in the tech and AI sectors. NVIDIA's pivotal role in AI and Supermicro's significant contributions to AI hardware production are not to be understated. However, the volatility of these sectors means that investors must be prepared for potential fluctuations. As for investment advice, the crashes have brought the share prices of NVIDIA and Supermicro down to potentially attractive levels. For those who believe in the long-term prospects of these companies and the sectors they operate in, this could be an opportune moment to consider investing. Yet, it's important to conduct thorough research and consider your risk tolerance before making any investment decisions. In conclusion, while the crashes of NVIDIA and Supermicro have caused substantial market turmoil, they may also have opened up intriguing investment opportunities. Both companies have demonstrated robust growth this year and are likely to remain influential in the tech and AI sectors. While the crashes have been dramatic, they may present a unique buying opportunity for savvy investors. Thank you for joining us in this deep dive into the NVIDIA and Supermicro stock crashes. Your engagement fuels our analysis, so don't hesitate to drop your thoughts or queries in the comment section below. Remember to hit that subscribe button and follow us for more insightful stock and financial market analysis. Stay tuned and keep a keen eye on the market. Opportunities are often hidden in unexpected places.